Welcome in this video, ZBCN coin. What is the next target? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. From a chart perspective, it is currently observed that price movements are at a highly critical and exciting stage within the framework of the Elliott wave theory. According to this theory, the price is currently within the third wave, which is typically the phase where the strongest and fastest uptrends occur in the market. In Elliott wave structures, the third wave is generally larger, stronger, and more volume-driven than the first wave, and is often referred to as the impulse wave among investors. This is primarily because many market participants have now recognized the trend and started taking positions, naturally accelerating the price movement. Based on the current observed structure, the price has reached the 3,272 level, which is an important technical target determined by Fibonacci extension levels, and is also a key resistance level closely monitored from a psychological standpoint. However, if the price manages to hold above this level, the next extension target suggested by Elliott wave projections is the 4,272 level. This implies a continuation of the current uptrend and serves as a clear indication that bullish momentum remains strong in the market. The third wave is characterized by both positive alignment of technical indicators and a surge in volume data. Therefore, being in the midst of such an impulse wave is highly valuable for investors. The fact that the price is testing the 3,272 resistance, then breaking above it and turning it into support, signifies a technically confirmed uptrend. After this breakout, a brief consolidation phase around this level is normal and can be seen as a period of accumulation before targeting the next level at 4,272. These types of technical structures often create a positive feedback loop. As the price successfully breaks previous resistance levels, new investors enter the market. This results in an increase in demand, creating the buying pressure needed to push the price to the next level. Moreover, in strong third-wave scenarios like this, it is common for supporting technical indicators to also produce positive signals. With the price surpassing the 3,272 level, it is only natural for investors to focus on the next target at 4,272. Fibonacci levels are among the most widely used and respected tools in technical analysis. Levels like 1,618, 2,272, and 3,272 are typically used to measure trend extensions. Breaking past 3.272 signals the potential for previously unseen new highs and suggests that the trend may deepen further. Every moment the price holds above this level confirms that the upward movement is built on stronger foundations. This creates a reassuring environment not only for short-term traders, but also for medium and long-term investors. Furthermore, within this ongoing third-wave structure, when psychological resistances align with technical ones, price movements can accelerate even more. This is because investors interpret the break of technical levels as positive news and enter trades accordingly. This triggers a chain reaction of buy orders that pushes the price higher. In particular, when algorithmic systems identify these levels as buy triggers, sharp and rapid price increases can occur. In this case, the 4,272 target becomes more than just a theoretical level. It becomes a realistic objective under actual market conditions. But we can't base analysis on Elliott wave alone. Let's now take a look at other metrics as well. Stay tuned. One of the most notable structures observed on the chart is a very clearly formed cup pattern. This formation is considered a strong and reliable reversal structure in technical analysis. Especially when it appears on long-term charts, it generates a highly credible bullish signal that instills confidence among investors. The cup pattern here fully reflects the classic structure described in technical analysis literature. The price initially moved downward to form the left side of the cup, then stabilized by creating a base in a horizontal range, and finally began to recover upward, completing the right side of the formation. Cup formations typically represent a period where the market experiences a decline, stabilizes, and then resumes upward movement fueled by renewed buying interest. The most crucial aspect of this structure is the price reaching the peak of the formation and breaking through that level, signaling a move toward a new upward target. In the current scenario, the price has successfully reached the target area of the cup pattern. This is a highly positive development from a technical perspective and a clear indication that the market has successfully completed the formation. One key detail often emphasized in such formations is whether the move toward the peak of the cup is supported by volume. As seen here, the price has risen steadily and overcome several technical barriers to reach the target, indicating a significant increase in buying interest. Reaching the target level of the cup suggests that positive expectations and confidence have been reestablished in the market. The successful completion of the formation is generally considered a confidence-boosting signal for investors. This is because long-term formations like the cup indicate that the supply-demand balance has been completely restructured and that buyers have taken control. This provides important insights not only from a technical standpoint, but also in terms of market psychology. For more cautious investors, reaching a clearly defined formation target often serves as confirmation and can trigger new buying decisions. Moreover, the completion of a cup formation does not necessarily signal the end of the current uptrend. On the contrary, it often creates the potential for the price to aim for even higher levels. Successfully reaching a formation target generally reflects a healthy and strong technical structure, encouraging investors to take bolder positions in the medium to long term. In many cases, after reaching the initial technical target, the price may consolidate briefly before beginning a new move toward higher levels, supported by volume. Cup formations demonstrate how strong and sustained a rally can be after accumulation in a bottoming phase. Hitting the target of such structures produces positive signals, not only in terms of technical analysis, but also investor psychology. These patterns require long-term patience and consistency, contributing to healthy price development and rebuilding trust in the market. The fact that this process has played out successfully here suggests that buyers are now dominant, and that the price may continue its upward momentum. The scenario from this point forward appears quite promising. Reaching the technical target indicates that the price may now progress by forming new patterns. For example, after completing the cup, a cup and handle pattern may emerge, or the price may begin to move within a new ascending channel. In either case, the technical outlook remains positive, and the likelihood of the price aiming for new highs increases. One of the important technical indicators on the chart is the ATR, or Average True Range Indicator. This indicator measures how much the price moves over a given period of time, revealing the volatility of the market. The current level of the ATR is extremely noteworthy because a high level of the indicator indicates that there is a lot of activity in the market. This can actually be a big advantage in terms of technical analysis, as prices tend to make strong moves during periods of high volatility. A high ATR value provides valuable information, especially for active traders. As this indicator reflects the magnitude of price movements, it provides insight into the strength of trend formations or ongoing movements. The current level of ATR is significantly higher compared to past periods. This suggests that prices are moving in wider ranges, and the market is becoming more volatile. Increased volatility can mean more trading opportunities, wider price ranges, and potentially bigger gains. So, while this is a time of caution, it is also a time of strategic opportunity. We can understand volatility by looking at ATR. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.